Hi, welcome to SpreadHunter, software for active traders. We're going to take a look at a few stocks that we talked about on Thursday, and then we're going to also look at where the underlying broad market closed today on Friday. So let's take a look at those charts. So I know we're not, I don't have the charts from Friday, but I do know that the earnings are coming to an end, and we've seen some gargantuan moves. Tesla, as it turns out, bounced off the low. It traded all the way down to 295. It closed over 300, around 306, I think, and that was a gargantuan down. That was probably 35 points from peak to trough. Apple, gapped up on Friday morning, and it traded all the way up to 174 and a quarter, I think, which would have put the 70s, which were trading, my memory fails me, they were trading somewhere in the $1 range. It put them up to as high as 4 and a quarter, and the 72s, which I think were trading under a dime on Thursday, those traded up to, they had to be over $2. So therein lies the leverage of buying these options going into the earnings. And the other thing that we talked about was the SPYs, and this is not the exact closing price that you see here of 258.31. I actually think it closed 258.45, and the option prices here reflect closer to the 31 price, but I think they were higher. So if it closed where I think it closed, these 57.5s went out at the close of trading over 90 cents, and the 58s went out close to 50 cents, in between 40 and 50 cents. So once again, these 58s were trading well under a dime. These 57.5s on Thursday evening, I believe, we're trading under 25 cents, maybe even as low as 20 cents. And you can see the leverage with, albeit a decent move, but the SPYs only closed up 86 cents for the day, which, as you can tell, is barely 0.3%. And the market continues to grind higher, and the only way that you can really play in the SPY is to be long these calls. And the longer you wait towards expiration to buy them, the cheaper they get. I grant you that timing is a big issue, because if it doesn't move, they go to zero. But if it does move, and you bought something for 4 cents that trades over 40 cents, I don't have to tell you the rate of risk-reward rate of return that is. And the other thing is being short puts. Personally, being short puts scares me to death. But you can be short these put verticals, and you can sell them for 10, 20, like this is 2.5 point strikes. You can sell some of these spreads for 40, 50, 60, 70 cents. And they can and do go to zero. The 7.5, 8 was probably close to 50 cents on the close on Friday. And there it is, 0.101, which basically means that the spread went out at zero on the close. So, and the 8 to a half spread, if my closing price at 58.45 is correct, this spread went out close to a nickel. And wherever you sold it, you could have gotten it back well below a dime. So that's what we're looking at for Friday, and we'll see what happens the next trading day. All right.